Let me click record. Make sure that I can. So really pay attention. Be sure to take notes. And I'm going to give you guys just some key pointers. I'm going to move into a lot of different aspects. I'm going to go just a fundamental, technical deep dive into Bitcoin, and then maybe a few other major pairs. But again, it's important to remember that I always look at Bitcoin. Most people that are traders look at Bitcoin because it is the most liquid market in cryptocurrency, and it kind of dictates the entire market overall. So if I go to CoinGecko, you can go to CoinGecko, you can go to CoinMarketCap, both are very similar. And I feel like there's a few others, but I just never use them. Okay. And I'm going to go ahead and share my screen now. Let me know, one sec. Which screen do you guys see? Do you guys see my desktop, or do you guys see my trading desk? Here, let me go ahead. I can't see the chat anymore. That's kind of frustrating. Sorry, guys. Give me a sec. I want to make sure I can see the chat. Okay, cool. Let me know if you can see the trading desk. Okay, because I got two situations here. Awesome. So I usually look at CoinGecko or
that's me.
CoinGecko or CoinMarketCap, and these kind of just give you, some price ranges. Not price ranges. They give you the market cap, they give you the volume, they give you the data you need to kind of understand what you're looking at in terms of cryptocurrency. So first and foremost, as you can see here, Bitcoin is ranked #1. Why? Because it has the biggest market cap. Now, for those of you guys who don't know what a market cap is, it's just really, really simple. It's basically the total amount of money inside of one product. Okay, so just to give you an example, the market cap for gold in the world,
Ryan
every single household, every single bank, and it's hard to keep track of every single household, but we'll just give you that example. Every single central bank, every single government, every single major, gold holder, gold miners, all of these companies combined. If I have 1 million worth of gold, and my dog right here has another $1 million worth of gold, and then let's say Ryan has $10 million of gold, and those three people are the only people in the world that own gold, what is the total market cap of gold? The total market cap would be 12 million, because 1 million here, 1 million there, Ryan has 10 million. In total, that is $10 million. Or $12 million. So here you can see of all of the Bitcoin that's currently in circulation, and if I were to click on that, let's just go ahead and click on that. You can see right now the circulating supply is 18,666,343 Bitcoin. Now, on that circulating supply, it is a bit tricky to know because Bitcoin in that supply has been lost. Let me go ahead and admit a few others. Bitcoin in that supply has been lost. There have been people on hard drives that have dropped them into the ocean. There was a big article the other day where some guy couldn't get $200 million worth of Bitcoin off of one of his hard drives, and he forgot the private key. So as he was trying to get it, he just couldn't. And I believe that's probably lost forever. So this number is going to continue to go down, which means Bitcoin in itself, in this protocol, is truly deflationary. Because there will always be less and less Bitcoin. Things are going to happen. They're going to get stolen. They're going to get forgotten about. And I'm assuming less and less people are forgetting about it. But if you were to multiply 18,666,000 times, okay, where is it? The total price right here. Okay, well, the total price is actually right here. So this is the 24 low, this is 24 high right here. You would come out to a $1 trillion market cap. Now, let me add this other person. Now, when you have a $1 trillion market cap, and let's go back, and the next closest market cap, okay, is only $200 billion. This is 5 times the size of this one, and this is 5 times the size of this one. So typically, however Bitcoin moves, the whole market will move because you have big banks and institutions now in the game where they're trading these other pairs, okay, based on typically Bitcoin. So if they see Bitcoin's going to drop, or they catch a drop and they're like, it's going to drop, 10%, they have actual order books and what I call bots that trade these things down as well. So that means maybe Theta goes down. That means Chainlink goes down. That means, Filecoin goes down. That means Terra. Everything typically follows Bitcoin. So if Bitcoin is typically red, the majority of crypto assets will also be red. And as you can see here, the majority look that way. If Bitcoin, and I've said this before, if Bitcoin looks green here, right, over the last 7 days, then that typically means that most things will also look green. And green simply means it's going up. Red means going down. So we're going over the basics here, but now we're going to get into the fundamental deep dive of Bitcoin. I am on the BLX. And by the way, this is TradingView. Okay, so TradingView is a platform that is free to use. I do pay for a premium membership so I can have a bunch of other indicators. But in general, this platform is completely free. You're more than welcome to go sign up, create an account. Okay, and I'm using the BLX chart because the BLX chart is the oldest crypto data chart we have. If I were to go to, for example, the weekly, you guys can see, and let me just actually get, and by the way, I also look at a logarithmic chart because if I don't, look at this, ready? Let me pull it off. You can see that it doesn't really give you perspective in the markets. What it does is it just shows you something that's moving up, 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 up. And when you see this, people get scared, they freak out, and they're actually selling in these ranges when we actually probably have a lot more potential to move up. I mean, you guys can see here from the weekly chart, this is pretty crazy, guys. So I'm not going to go over what a candlestick looks like, okay? And from now on, we will have those calls. I promise you, if you don't understand what a candlestick is, you're going to get value from this call, but it might be a bit confusing. So that's just a heads up. You might get value from the call. It might be confusing. So I want you guys to pay attention if you already understand what a candlestick is. And I want you guys to focus on the things that I'm going to be sharing with you, because I do believe there's a lot of value we can get. I'm going to use some different indicators. You guys are more than welcome to go get those indicators. Some of these indicators, like the VPVR here, is a premium feature. You can actually use it, and don't worry what it looks like on the weekly, but this is a premium feature, okay? This is not. This is a free one tool that someone went ahead and created, and it's a phenomenal tool. So I'm going to go ahead and add a few other things here, and I'm just going to get into Bitcoin right now. If you guys have any questions, okay, we'll answer those at the end of the chat. Let me make sure that I'm looking at this chat. We see CoinGecko, sir. Mute yourselves. Altcoin. Okay, cool. Do you guys see my current chart? I don't know if that was a second ago. Jordan, can everyone see my chart? Go ahead and say yes if you can see my chart officially. Awesome.
Yes.
Okay. Yeah, mute yourselves if you're not muted. And I will try to slow down because I talk fast and I get excited. I promise I'll slow down a bit, okay? So I'm going to go ahead and pull up a few different ones. I like RSI. It's simple. However, it is not the best indicator in most situations. I'll explain why. I never sell when we're above 80 on a product like Bitcoin. I'll pull this up. I'll look at a few different things, okay? Let me just delete this, actually. So this right here, this tool, and let me go from the weekly maybe down to the daily. This tool is really, really cool, guys. And it's called the hash ribbons. Okay, so I'm going to go into a few different tools. One day I'm going to go into a training maybe on, exactly what to look for at Ichimoku. But today I'm just going to give you guys an update on where I think Bitcoin is moving using different indicators. When I have one indicator, two indicators, three indicators, maybe four in price action, all saying the same thing, okay, even if one is off, that to me is a good confluence. That tells me that Bitcoin is probably either going to continue moving up or down. And typically the very first indicator that I use is actually nothing at all. I don't even use this. I don't use any of these indicators over here. You know what I do? I look at price. Did we make higher highs? And our lows, lower high or higher lows, okay? This is a higher low compared to this one. And I tell everyone this because if you learn how to look at a chart like this, you don't freak out. You don't go and sell, even though we did hit an all-time high and then we dropped by what? How many percentages here? Let's go look. I mean, we dropped what? 18%. 18% of 62,000 is a lot of money, especially if you bought it, 60,000. Now, would I be selling? Well, first and foremost, you bought wrong. You bought the top, fair, right? But would you be selling down here? Now, if this looks to me like it formed a local bottom, just a local bottom. How do I know this? Because this candlestick, based on price action alone, right, easily, look at it, it didn't even try to move down. Not a single wick to the downside came beyond this point. Matter of fact, it didn't even go beyond here. That tells me a lot of buyers stepped in at $51,000. Now, with a market cap of $1 trillion, okay, and by the way, this is a daily chart now. We're not looking at the weekly. A market cap, here, hit this person. A market cap of $1 trillion, that means it's not just regular buyers. This means whales. This means institutions stepped in at $51,000 and bought, okay? So this right here was a good indicator. Typically, after you see something like this, you might see another little green candle up 2, maybe 3. Then you see another, what I would call maybe a little bear trap down to here. Not a legitimate bear trap, but just, people are buying in because they saw this candle. And I've seen so many times the market starts to move back down to freak people out. They sell their positions because now they're down. And then the market does that bullish continuation. All I look for in the beginning, though, guys, is price action. Where's Bitcoin moving? Series of higher highs and higher lows. That's it. That tells me we're still trending. I don't care what your typical diagonal trend line looks like. Some people are doing this and they're freaking out and they're selling. Let me show you. And this is not the right way to look at a chart. By the way, diagonal trend lines, right? Diagonal trend lines are a good indicator. They're not the best. I've learned from the best technical analysts in the world, your horizontal trend lines or support resistances, excuse me, I would say right here, are actually stronger on almost every single occasion than your diagonal. How do I know this? Well, because here, I'll give you an example. In Bitcoin's recent history of the last year, we had a trend line that kind of formed, and I'm just going to go ahead. Right there. We had before that, you see that trend line? If we were to say this is the local bottom here, and this was the high like right here, we kept moving up and then we broke down. Here's the problem. I even sold here, guys. I was like, it's not looking so good. We weren't in any new territory. I was really uncertain about how Bitcoin would move. I'm assuming a lot of people were. So it's fair if you sold here, but look what happened. It actually found local support at the previous, would you look at that? High. So what was a resistance now became a support, and it was supported here. So this diagonal was broken, and there's so many times where diagonals really just don't give you a good signal or an indicator. Are you guys noticing that? I could show you guys right here. Let's go here again. You could get really clean and say, okay, that was it. And look at, we pumped, broke down, pumped right back up. What was a support right here now became a resistance right here. And let me go ahead and get a little closer into that. And let me actually just delete the hash. We'll look at that in a sec. I don't want this training to go on too long, so I'm just going to go into price action, a few indicators, tell you what I think, and you guys make your own educated decisions. And please be paying attention, take notes. This is not a call you can just sit around and listen to. This isn't your personal development call. This is something that you learn by looking and watching and taking notes, period. If you have TradingView in front of you, awesome. But here's the thing, while you're doing that, you're going to be learning less. So do this after, okay? Start playing around with lines after. Start playing around with some indicators after the call. Support, breakdown, resistance. If I didn't have this line here, you'd be like, uh-oh, now we broke back down right here. This thing's going to continue going down now, but it didn't. Why? Because we had a support right here. Let's go ahead, draw a line right there, okay? And as you can see here, in terms of trading, that looked like, it was within a few $100. But that looked to be a pretty dang good resistance at one point. Broke out, support once, support twice, broke down. It really broke down. And then this was actually what you legitimately would call a bear trap, or excuse me, a bull trap. And a bull trap means people were being bullish right here. They got trapped into this trade and it broke back down because it looked like it was going to break out. And that's why I always kind of wait for confirmation. Waiting for confirmation isn't always the smartest move if you're not. If you're uneducated, it is a good smart move. If you're a trader and you're constantly on the charts, you're going to miss a lot of the trade because you're waiting for confirmation. So it all depends on how much time you're willing to devote to looking at a chart, guys. And if you're not on it daily, or you're not on it, 30 minutes, 40 minutes, an hour a day, then you want to be waiting for confirmation. However, if you are on a daily, confirmation sometimes can get you killed. Like I would have entered here, but then I would have exited here. Some people, they entered here and just held, and they're like, oh, it'll go break back out, and then they're down here or here. Okay, sell it. But I actually remember this. This was actually Chinese news, something about China getting into the market or allowing Bitcoin not to be, or I think they were allowing Bitcoin to be legal and some capacity at that moment in time, some big news with Xi Jinping. So that actually pumped the price of Bitcoin here. However, you can see here, we were again, resistance, we broke out, support, support, resistance, okay? So overall, we never broke down back down below there again. Now, you notice how this diagonal support, I could draw another diagonal support. So diagonals actually aren't as good or consistent. You could have a million different lines, and I'll show you. Okay, why am I not grabbing this thing? Okay, you could have that line. You could say, oh, but that broke down, but now this one didn't. Look at that. But then we broke down right here. You could also have this one. And why am I not using these wicks? Just because, I mean, this was March 2020, absolutely nasty wickage. I just, most people don't mess with those. You could have one right here. And so constantly you're just finding support, resistance, support. I actually like the horizontal supports and resistances a lot more. And if you would have simply had that line up, you wouldn't have been selling here. Matter of fact, you wouldn't have sold at all. And you would have just been into that bullish continuation. I'll tell you what happened to me. I sold here using a diagonal, and then I waited, and then we broke out, and then I was buying back into $13,000 to $15,000. So these horizontals are far more consistent, I would say. Now, on that note, we've been pumping pretty hard. So where do you really find a diagonal support anymore, right? Well, I can tell you, I'm just going to look at local highs and local lows. I would say right here. Why right there? Why am I avoiding the wicks? Because legitimately, every single day, price failed to break back down. In terms of, it broke down below, yes, but it failed to actually break back down on a candle, which means, okay, this is a really good support at $30,000, $30,400. The next one would actually be closer to here, okay? Like, you know, right there, okay? When we broke out every single time, and this is just so you guys get some context, you guys can understand how to start trading these things. When we broke out, most people bought into this. Some people sold right here. We had this bullish continuation. They saw, you know, over a period of what, 2 weeks, a week and a half, break back down below the price they got in at. This right here, okay, this is where people get caught up. They get freaked out. They think they're so smart here, and then they're selling here because they're like, well, at least I didn't take much of a loss. No, you did. You know what? You lost a bunch of time. So you don't want to really, you know, get caught up thinking about this. What I like to do most of the time is I like to wait for a retest of the previous all-time high. But Bitcoin is so bullish, right, that it never even touches its previous all-time high. As you can see here, this used to be the all-time high, $40,000. We never even, what? We got within $3,000, a $3,000 difference. We never actually touched that. So I'm actually looking at local bottoms as supports now, not local tops. I don't think we really retest often. Is it possible that we break back down from here, right, to retest this support? Possibly. Could we break back down here? Possibly. Is that still a series of higher highs and higher lows? Yes. However, that would kind of be an indicator to me that this thing is seriously weakening. And so, let me go back. So let me make this simple for you guys, okay? Right now, what I am seeing based on price action on the daily is that this seems to be an official, right, support, period. If we break back out above here, that to me is a good indicator to get in. Now, if we break out, let's just say even by a couple $100, as you can see here, last time we broke out by thousands of dollars on this one green candle. Sometimes if you miss this trade or this thing is so big, don't FOMO in, just be patient, wait it out, see what happens. And here's the thing, you know, sure, you're going to continue moving up, but how much? It could be a couple $1,000s before breaking back down. In this case, it was 46 to 57, $10,000 range, but then it broke back down. And I think patience here is your best friend. When I saw this, I would have got in. Oops, let's delete that. When I saw this, hard wickage to the downside, 1, 2, 3, 4 hard wicks to the downside, And then officially, this big green candle right here that was so much bigger than the red candle right next to it, right? They call this a bullish engulfing candle. Okay, it engulfs the smaller one. That is a good indicator to get in. Why? Because price failed to break back down below here. And we have previous supports here and here. Okay, that this support could have actually gone down here. It never did. So this alone was a good indicator that this officially was the bottom and the local support. We saw the exact same thing here, right? We broke out, except not as big as here. We broke out to a new all-time high. People, probably FOMO'd in right on this candle. You guys can see that. On this candle right here, let me just delete that so we can make it simpler. Let me get a drawing tool. Give me a second. Where's that tool? So on this green candle right here, okay, people bought in. They've been selling their positions all the way till now. And if they would have just been patient, because a breakout, every single time I've noticed that people buy on the breakout, is that true confirmation? No. Typically you want to retest or a support, and they never really got that. I mean, maybe-ish right here, but we still broke down from 57 down to 53. I mean, that's a $4,000 move. And from the top, that's like a $7,000 move. People were freaking out, and they've been selling all along. This right here, though, if I can confirm, this used to be what, a resistance twice, became, and a support right here, resistance twice, became another support. So now I'm looking at this saying, okay, this right here was a good entry. We're below the previous all-time high. However, it looks like a bullish continuation. So if you were to ask me right now, based on the daily, where do I think Bitcoin is going? I'm saying up. And if that, if Bitcoin is going up, then altcoins are likely going up until the very end of this bull run. That's just kind of how the trend moves. Typically, if Bitcoin is moving hard, altcoins are kind of chillaxing. They're chilling where they're at. They're not really losing too much value. However, they're not moving. Why? Because the majority of money is moving into Bitcoin. And big money is really what moves the markets, guys. So let's go to the 3-day now real quick. I'm going to remove those drawings. You guys can see here, we're seeing the exact same thing. Not a single candle or wick to the downside here. That tells me there is zero selling at this range, 51,000. As much as you see what I call fake news, okay? Fake news around, oh, Bitcoin is going to drop because of this. Oh, Ray Dalio, institutional hedge fund guy, said Bitcoin, is going to get outlawed. Bro, don't fall for that crap. Price tells all. These people are buying here even though there's an article there. So I don't even look at those types of articles. Yes, news is important, but when it comes to FUD, fear, uncertainty, doubt, I don't listen to it. What I do is I pay attention to price action. Here, this is a good indicator that we're probably going to continue moving up. If I were to look at the 3-day chart, and now let me go ahead and pull up the Heikin Ashi, which kind of just gets rid of noise. Okay, you guys will notice, right? We have a lot of green candles, fewer red candles right here. This whole price history, right? Mostly green candles. If I were to get rid of or change the candle from candle to Heikin Ashi, you will see this actually gets rid of a lot of noise. And so every single time, guys, except for when the price was lagging a lot, it really wasn't doing much. Every single time we've had in the Heikin Ashi situation, on the 3-day candle, this is just something you guys can look at, and I'll go ahead up and pull up one of these lagging indicators. That's the 9-day. Let's pull up, let's go to let me do this. Let's try 20. That's actually on the weekly, but we'll do 20 anyways. Let's see. Yeah, so let's go back to here. I'm going to change a few things up. By the way, an EMA is a lagging indicator at 20, and I've told you guys this before, but just in case you don't know, 20 simply means this line is smoothed out and is the average price of the previous 20 candles, okay? So if I did 10, that would mean it's the average price of 10 moving candles, which would be closer to price. The smaller the number, typically the more it hugs price, okay? It typically acts as support and resistance for most people. However, I'm going to do 13. And the reason I'm doing 13 on this situation, okay, guys, is because I want to see how close are we consistently getting to the 13 and being supported. But the reason I'm doing 13 is actually because it's a Fibonacci number, okay? There are people that like to use those. There is one tool I've used a lot. It's called Tetchy's Silicone Fibonacci 8, 13, 55, and 200. And those are all Fibonacci numbers. And you guys can see here, it just kind of gives you, you know, a good support resistance based on each one. Now, here's the thing, guys, as we begin to fan out more and more and more, and we get further away from the 200 EMA, that tells you we're getting to a point where eventually this thing's going to want to break back down. As you guys can see here in the past, we've been pretty far, right, in the last bull run. Does that mean we're going to break down now? I don't think so. I doubt it. But if I were to show you guys, you know, from here, why is this thing not grabbing? Okay, there we go. From here to here, there was a 260% range, okay? From the top to this EMA. And I always look at the 200 to get a good indicator. We were up 473%. Now, is the past a good indicator of the future? No. It does give you something to work with and look at. Why is this here? That's so weird. Those yellow lines. But if I were to pull that back up, here, let's go ahead and do that. You can see from the top right now, we are. Can you guys mute yourself? I can hear one of you. I don't know who that is, but please mute yourself so we don't get any distractions. From here to here, right now, we are up 200%. So you notice we actually pumped 400% above that. Okay, guys? I'm going to go ahead and delete that now. I'm going to pull up another EMA, and I'm just going to do the 13. Because we are on the 3-day. If I did 13 on a different day time frame, it would look different, guys. So just remember, this changes with every single time frame you do because it's doing the last 13 periods. But you can see here, we've constantly been supported almost there for sure here. Not a single wick or candle, excuse me, broke down. We had one wick here. We're having two situations there. The second thing I'm noticing that I believe we're going to have bullish continuation on is the fact that we've had, on the Heiken Ashi in particular, we've had 3 red candles or 2 red candles every single time before we did a bullish continuation. So if we're not supported here, right, I'm not going to necessarily get freaked out. I will be looking at some previous supports, and I would actually be changing the chart up back to candles, but I would be looking for some previous supports in these ranges. I'm still going to be up based on where I got in, but that's where I kind of do my own risk management and assessment. Do you think some apocalyptic events would have a huge crash? Someone's asking me that. Yes, but we'll talk on that. And I think it would happen quickly and then change. We'll do questions and answers after, guys. So if you have questions, go ahead and ask after we're done with this quick analysis. I shouldn't say quick because it is a little bit longer. But I'm looking for supports again on the horizontal plane. I'm not looking at diagonals as much. Why? Because we're already breaking down from a diagonal here. But that doesn't give me enough information to make a legitimate decision. So I'm going to pull off the Heiken Ashi now. Looks like we're bullish there. Let me go back to candles. Oops, let's go to the regular candles. I'm going to go to the weekly, guys, and I'm going to show you guys now. Let's delete that. What I'm thinking and looking at. It's funny that I even have that there. In terms of where we're at with price on the weekly. Is it possible, right, that we're supported right here? Yes. Is it possible that we break back down to 44, which would be here? Yes. If we do, I would still be bullish. However, I'm going to be a bit more cautious because on the Heiken Ashi now, that would be a lot more red candles. And we haven't had that since this movement here, which was what? A period of a lot of weeks, right? For no real price action at all. The second thing I've noticed is every single time we break out to a new all-time high, we never touch or retest that previous support. I'll show you guys on the BLX here now. right? And I think I showed you guys this last time, but for the new people on the call, let's go ahead and show you. Now, obviously, these are a long time in the past, right? We're talking 2013, December 2013. We actually did break down to retest support, but that was so quick that we never actually, when we broke back down from any serious percentage gains, we never actually broke back down to this range here. So then we went off to make a new all-time high. Percentage wise, that was 1,800%, right? And in this situation, when we broke out to make a new all-time high, currently we're only up, 200 and some percent. Does that mean we can't break back down to here? No, it does. We can. There is a possibility. However, with the amount of institutional buyers stepping in, I just doubt it. Like, I just don't see that happening. Every single time we break out, and as this thing fans out, you guys will see here. Let me go ahead and pull up this guy. That we really consistently, every single time we break out above this midline, which was in the $38,000 range, midline right here in the past was 4,400. It broke out and really pumped, guys, and it pumped to the top of this range. So the top of this range, as of right now, in where we're currently at, is about 110 to $120,000. Is it possible that we move beyond there? Sure, we could break back down and come into this range here at 77,000 in February of 2022, and then continue back up to 200 some $1,000. I haven't seen Bitcoin seriously at any time frame break out above that. I mean, this is just kind of like the most bullish indicator I've ever seen. Even one of these like legendary traders named Peter Brandt has looked at the log growth curve here and said he's never seen something go parabolic 4 separate times like Bitcoin in his entire 44-year trading history. That being said, I doubt that we're just going to break out above here. That would invalidate this whole system anyways. Now, in this situation, because of the March crash, we dropped so violently that I actually doubted we were going to break back into this range. So for that reason, we could possibly violently break out to the upside and then break back down. I'm not too sure, guys. I just don't know if there's enough money to double the market cap right now in Bitcoin in a matter of a couple of weeks. Here it took 1 week, 2 weeks, 3, 4, 5, 6 weeks, a month and a half to really go from $7,000 up to 20. Here it would be, if we broke back down to this range right here, which we already have, 52, 1, 2, 3, 4, 5, 6, 7, 8, to 110,000 would be like June. Is it possible? Yes. Here we did it in like 4 weeks. So as you can see here, this thing is fanning out. It is taking longer to make the same percentage gain moves that it did in the past. But in general, not a bad indicator to look at. Is that the end all be all? No. Okay, let me go ahead and delete these now. I'm going to go ahead and pull up a few other indicators. We're going to go and look at the 2-year MA on the daily. You can see here, this is another really cool indicator that every single time we have broke out to touch the range high. By the way, this is I believe, I can't remember what the midline is. The midline is literally in the middle of this green line. The green line is 5x less. The red line is 5x more than the midline. Okay, so you don't see the midline, it's not necessary. But every single time we touch the red line, which is 5x greater than the median, and we typically break out. And we break out percentage-wise a lot. Every time we break down below the 5x below the median line, which is the green line, it's a good buy. So this green area means buy. Let me admit this person. The green line means buy. The red line means sell. However, people were selling, and I'll just give you another example why I'm still very bullish Bitcoin. Every time we've touched this line, okay, we broke back down. We broke down 40% here, another 40% here, 30-some% here. And then we seriously, this was truly the breakdown. But every single time we touched it, we actually retested it one more time and then really broke out. So we've never actually seriously done that in this trend. You can see here. And what was the period here? I'm just going to give you guys an example. Look at how long this took. For the first time it actually touched it took about 2 months, 10 days. to get back to the point where it broke out, no, actually 2 months, 2 whole months of moving sideways, which I actually think could happen to us right now. I mean, since this previous all-time high, which we never even touched the line,
Wow.
to the previous all-time high is another 2 months. Currently, we're sitting at about 80 days, which what? Almost 3 months. So, and this line continues to move up, and that's exciting because right now, the top of that line is $70,000. So I expect as we continue to make new higher highs and lower higher lows, that this red line is going to look something like this. Okay, it could even heck, start to move up like that. Either way, that's going to be somewhere in these ranges. And as you can see here, every single time we've touched and played with that line, we've actually broke out. Now, again, because we are fanning out and percentages are harder to gain in a market like this, this was 150% move from the top of the red line. Now, the one previous, because this was the most bullish asset in the world, was 400%. So is it possible, right, that we move maybe half of 100%, or maybe even just tops 100% from, let's say, here? If we touch the line here, that would still be 159,000. That's pretty high, guys. And that would probably be a wick for a week. It could be as high as, 50 some thousand. That's still $130,000. If we started touching the line today, or, sometime this next week, which is possible, it could still be 120,000 at 68%. So I'm still very, very bullish Bitcoin. If we start to break down in any serious manner, I don't think we're actually going to ever retest, honestly, 29,000 or even 20,000 ever again in Bitcoin's history. If we do, the lowest we'll go is 29,000. I've never seen it once break out to make new all-time highs past the previous all-time high over a
That's the
period of
problem
years to
Bitcoin.
touch, right, this range. So I wouldn't be freaking out there. If anything, I'd actually be accumulating more and more and more as we continue to drop. If you're already all over leveraged and all the way in, then that gets kind of dangerous. If you don't have a job, that gets kind of dangerous. If you don't have a consistent income, that gets dangerous because now you're sitting through this entire move. Does that mean it's dangerous to the point where 5 years from now, you're not going to be worth more? No, it's the problem is most of us need money within 5 years, right? So you really have to be attentive to your risk management. You have to understand, where am I coming from? What's necessary for me in my life? What do I need? Okay, do I need to pull out a little so I have some cash sitting on the side? In this situation, I wouldn't be pulling out. I'd actually probably be adding positions after this last 3-day close. Let's go ahead and look at that again, right? And don't worry about this now because this indicator doesn't make sense on the 3-day. So don't worry about that. You saw it all red, don't worry about it, okay? I always look at that indicator on the daily. This right here is pretty bullish to me. That one candle close on the, well, I don't know how much time we have left to close. Let's look that up real quick. Time zone, currency, where is it? Oh, it's not giving me the countdown bar close. You know what we'll do? We'll go to a different one. Are you guys seeing that? It's not giving me, oh, there it is. So we actually still have, joking, we have 2 days, 23 hours on this new candle. So this 3-day did officially close, and that's very bullish. You'll usually see another red candle here coming into this range to freak people out, but ultimately it'll continue moving up. That's what I'm saying. Let me look at a few others, guys, just to get some confluences and to teach you guys kind of how to look at things. I could do the fixed market bottoms. You're not going to see any green here. Every time you see green, that's a good indicator to buy. So you would have bought here, you would have bought here, you would have bought here and here, and look at that. That was truly the bottom. So this indicator gives you a pretty good idea and feel. It's a CM's fixed VIX. I believe my friend Andrew also uses it. I use it. It's great. I say there's a lot of volume that was traded here. Candle's looking pretty red, but it's looking a lot weaker to the downside now, obviously right here. And look at, you would have actually bought the bottom of this entire move, right? Most people are buying here because they're like, oh, we just broke out to a new all-time high. Wrong time to buy. That is not good confirmation, especially with Bitcoin where it continues to move down. So that's a good indicator to look at. Right now on the daily, we're not seeing any greens. So that tells me, sure, you might have a good buy here, but you're not getting as good of a buy as you got here. I can go down to the 4-hour. On the 4-hour, we're seeing some greens here, here, and here. But even then, guys, the 4-hour is less, I would say, accurate than the daily. So I like to look at the daily for an indicator like this mostly. Heck, maybe even 12 hours. Let's try 12 hours. Let's see what happens. Yeah, we're not seeing any 12-hour buys here, but we saw a lot in this range, 44. And if I were to go back to the 3-day, look at that. We didn't even see reds here. So, but in general, right? So as you continue to fan out, you're going to get less and less, which tells you one thing. This indicator is an absolute killer when it comes to the weekly buys. If you would have seen this right here into the 60 range, every single time we've hit that range, except for like, you know, here, because we officially broke out of the trend, and here, and here, and you just bought those, you would have been a happy camper. However, even then, right, buying here and then seeing it drop right back down to 38 was pretty freaky. I don't believe most people held this entire range. I just say buy, right? And in this situation right now, we're looking pretty dang bullish. It's not looking too crazy. If I get off the log chart again, it looks scary. But if I'm on the log chart, it looks pretty nice. So there's that. Let's come out and look at a few more other indicators before we hop off. The hash ribbons is super dope because it literally tells you when to buy. I mean, I would have bought here just using this indicator. Let me delete this now. Let me pull this up. Let's draw a few lines here and here. In a trend, by the way, this works really well in an uptrend. There's no signal to say, hey, sell at this particular point. I could tell you how the math works, but I really don't understand how the math works. I do know how it works. Doesn't matter for you. If you just pull this indicator up, hash ribbons, okay? And I don't know if I changed the values here, but go ahead and make sure that this hash rate short SMA is 30 days. The hash rate long SMA is 60, okay? And it would have told you to buy here, and again to buy here, and that's on the weekly, and you would have still been up. And I believe it's the exact same if I pull out and go from the 3-day minus a few days. You can see here, instead it would have told you to buy there, and it would have told you to buy like right there. Either way, you'd be up tremendously. You'd look super smart because you used one indicator. You would have bought in at 1880 here, and you would have bought in at 9100 here. Now here's the point of this indicator. The reason I wasn't buying like crazy here, I did buy like crazy here, sold around here because I thought we'd break back down. I wasn't in all of this noise, but let's just say I did look at this at the time and bought here. I would have held. Why? Because if you remember what trends look like, all it is a series of higher highs and higher lows. Well, this low is higher than this low, and this low is higher than this low. So that tells me we're continuing to move up. And if this thing flashes a buy signal in an uptrend, I'm buying, period. I don't care if the price is higher than it was, 2 weeks ago when I didn't buy it. I don't care. What I care is, am I going to catch a move that I'm getting a good indicator on? And in this situation, again, I had a buy signal. Is this a higher high than here? Yeah, don't care, right? This thing flashed a buy signal. Get your emotions out of the way. Don't feel like you're stupid for buying a high if this thing flashes it and it's continuing to make new all-time highs. Okay, so you can use that indicator as well. That's a good confluence. Are we breaking back down? Not seriously. But even when we do, all you see in this situation is a lot of sideways movement. So if we start to see some more of this right here, these little red zones like this, and this thing starts to chill out, and we see more red here again like this on this indicator, and then it tightens up like a coil, and then it flashes another buy, I'm probably going to look at a few other indicators. I'm probably going to look at some price action. I'm going to say, I don't care if we're here now at 69. This thing's telling me buy. I'm probably going to buy on the 3-day, on the weekly, on the daily. I'm going to go ahead and delete that. Hope you guys are getting value. These are some cool tools you can look at and use. Now, again, why is that important that I'm just doing Bitcoin? Because most of the market's going to follow Bitcoin. Ethereum is slowly, I think eventually, once it hits probably half the market cap of Bitcoin, and it will, going to decouple and it's going to look a lot different. But in general, you look at the chart, it's pretty similar. We're seeing a lot of support and less big drops on Ethereum from 2,100 down to 40% here actually. But even then, we're seeing a range of like 25% consistently. And I just don't think we're going to drop much more because most of the Ethereum product is locked up in DeFi protocols. So even if people wanted to just unload on the market, the people that are unloading, the people that are on exchanges selling, there's only so much pressure they can add before they just run out of momentum. Like there are so many people, including myself, including my friend Jordan, including our friend Tron, my friend Nick, all of these people, we're talking tens of thousands and millions of dollars are being locked up in DeFi protocols where we're not touching it and we're just earning interest and fees. So for that reason, You know, there's really nothing you can lose here on Ethereum. I think right now would be a pretty good buy, actually. Even if it dropped again, I don't think we're going to drop back down below 1500. Honestly, I just don't. And if we did, I would be a massive buyer at 1270. But either way, I just don't think you can lose in this range. If anything, this thing is primed to be a $10,000 token minimum, right? Because the market cap, that would make it equal to Bitcoin. If Bitcoin continues to move up, Ethereum's going to continue to move up. If Bitcoin starts to drop tremendously, Ethereum will, but by not as much. Okay, so that's just a little update, heads up on that. We're going to go ahead and go to a few last indicators. Let's look at the MACD. That's the 3-day. This thing is a very fast moving indicator, right? It's called an oscillator. So as the blue line crosses over the red line, that's bullish. And that's a good indicator to buy. So if I saw like this right here, see how this lags even a little bit, right? So like if I were just looking at price action, I didn't have this up, and I saw this indicator right, or this right here, this candle, this big green candle is a bullish engulfing candle. I saw that, and then I saw that we'd formed a bottom 1 time, 2 times, 3 times, 4 times, and by the 5th time, I see a big bullish engulfing candle. Because here, this wasn't engulfing. You guys see that? So I'm not buying there because we can continue to drop. But once we saw indecision here with these super small candlesticks, one last red candle, didn't break down, support here. This is a good indicator to buy. However, on the MACD, I didn't see it flash a buy signal. So I was late. How late? Well, let's look. I would have bought right here on this candle at the end of that daily close, which is a price range of 13% difference. I missed out on 13% or $4,200 move. That's a big difference, guys. This is why a lot of people that are some of the best traders in the world, if they're watching consistently, are price action traders. Indicators are for your average Joe. Indicators will help you to make a decision. Indicators are valuable to a degree. They help you when it comes to confluence, when you know this one confirms the move, that one confirms the move, that one confirms the move, and the price action does awesome. However, price action rules all, period. Okay. So that's just something that I want you guys to know, right? I would have got in here. Now it's still moved up like crazy. You still felt smart. Why? Because we're talking over a period of 18 days, you earned, you know, a 53% move. That's huge. But you would have had a 72% move. So if I had $100,000 and I dropped it on a Bitcoin, I would have been up to 172 versus 150. I mean, we're talking a difference of $20,000, guys. That's massive. Okay. Wow. Now in this situation, we broke down, right? You got out probably a little late. See right here, I got out. Why? Because I don't care if I saw this big green deal. We broke down. We failed to break out on the price action. Seriously. Not a single wick. I mean, so minuscule, you barely even notice it to the upside. And then we saw this massive sell-off. And then the second day confirmed it. But by that point, you were kind of late, guys. Look. 10% and upwards of what, 16, 17% on a single candle that kept moving down. So price action is kind of king here. However, you wouldn't have been out till like here or here. And by then you've already missed out lots of percentages. We failed to break, you know, out in any serious way up until, or at least on the MAC, according to the MACD here on this candle, 55,000 or 56,000 to a new all-time high, 62. And so price action would have told you everything you needed to know. Local bottom. Here was a local bottom. Look at this green candle. No green candles through here except for one, but this candle was very weak. It failed to engulf this one. So that tells me, on the daily, that's not strong enough for me to be confident. Now, if we kept holding this range and we started to look something like this, then I would be more serious about it, okay? But we didn't. If anything, we just saw another bearish engulfing candle. And then this right here. Now, notice what happened here. On the daily, we had one green candle. Although we did break out, or excuse me, red candle. I assume that's kind of what's going to happen here on the 3-day. We're going to have one bearish candle back down to 53.54. okay, for 3 days, maybe 3 days, maybe a day or two, doesn't matter. I'm gonna just wait and watch, and then we'll have some bullish continuation. That's typically what happens, guys. Does that mean it's 100% going to happen? No, it simply means that I don't know what's going to happen, but I'm going to keep my eye on this and say, if history is a good indicator of what could possibly happen in the future, I'll make a decision once I see more bullish momentum. Here, we kind of saw that confirmation. So you can wait to get back into here. You might miss it. It may never come back down to 53, but that would be not a bad buy, guys. It really wouldn't be a bad buy. Matter of fact, again, horizontals would tell me that I would say that right there, why, would be a good support because it was a previous resistance right here and here, which became, excuse me, resistance. And then again, here, here, and now it's kind of, it was a semi-support. And I think this was just a little trap. So if anything, I would say that we could break back down to 52 and then continue up. Okay, so let me drop that. Now that's Bitcoin, guys. I could do a bunch of other indicators. I don't know what that is, that little yellow line. Do you guys see that? Is that like on other things? It is. Is that a dead pixel? I think that's a dead pixel. Okay, so let's do a few other things and then we're done. Visible range, I do like this one. I'm going to go ahead and go out to the 4-hour. So visible range is a really cool tool because what it does is it's a volume indicator, right? Don't worry about the colors. All I look at is the volume. If the volume is typically down here, and it is, let's go to volume. This puts it on where the volume was traded at most. So this just kind of says, okay, yeah, a lot of sellers stepped in here, right? A lot of sellers stepped in here. However, it doesn't really indicate price ranges. And so what I like about this indicator so much is the fact that this right here tells me a lot of a lot of money was traded here at 56,600 and a lot of money was traded here at 47. In between those ranges, less and less money was traded. So from, let's just put a square from like here to here. In these price ranges, not as much volume was traded. So if you're in the middle, it's going to develop price history, but typically what this means is this is a resistance right now, 56. If we break out above there, we're breaking out. This is a dead zone, and this right here would be a support 47,000. So in this range right here, I would be looking to buy. If we broke back down to 48, I saw though that 51.52 looks like a good support, and you can see it kind of comes out here, but if anything, it's like a table and we see a serious drop off to here. So if anything, I could see it break back down, wick hard, and wick, I mean literally wick, and get bought back up to 51.52, 53, right? And then continue that bullish momentum up. If we break out above 56, that is a good indicator to be buying back in. Again, right? Let me just show you on the 4-hour again. This changes on the daily, right? Give me a sec. We saw no real trade volume from 47, seriously back down to like 37, and most of all 34. So this is a dead zone. If we hung out here for a while and started to break back down at below 46, 45, I'm low-key out. Why? Because I know that this thing is highly likely to move. These are like magnets. This right here is a magnet. This right here is a magnet. Everything in between is free fall or motions upwards. So for that reason, if we broke back down below 47 to here, I'd be out. Is that likely in this situation in bull scenario? No. However, again, as a technical analyst, as someone who looks at price action, I don't look as much at news. I don't really like to assume anything. Right? If I think, oh, for sure it's going to go up. Do I know for sure it's going to go up 5 to 10 years from now? 100%. It's going to be worth 500,000 to $1 million a token within 5 years, probably. And within 7 to 10, it's going to be worth like 2 million at one point in time. It might wick hard, go back down. But in this situation, right? The buying power I have at 34,000 is so much greater that I'm okay getting out at 45 if I have to. So I always look at that price action to make a decision. In this situation, it looks like we have a pretty big table here at 56 and again at 47. Am I going to get out here? No, because if anything, this is just something I could be accumulating into the next move up, which I do believe we are in store for. Why? Again, just looking at the trend. So I hope you guys got value from the video or, you know, the training. Let me know if you guys have any questions. How many people we still got on? I don't know how many people we have on.
13.
An amount. Okay, for the what hour? Does anyone have questions? So I know one person asked, apocalyptic events cause huge crash. Yeah, I mean, the coronavirus was a big, what I would call apocalyptic event, and very few people died in comparison to most apocalyptic events. So for that reason, I think another March crash is unlikely because I just don't think we're gonna have another coronavirus pandemic scare. And even if we did, you know, people are used to it. I just don't think as many people are gonna freak out anymore. We're all used to this shit. So for that reason, possible, yes, unlikely. Someone else was asking, same person actually. Targets are 50 to 57 for DOT. DOT, yeah, I think right now we're developing a lot of support in the range of 32, you know, up to this range. But as you can see on the 4 hour, it's not massive. If anything, our biggest, I mean, we are supported pretty heavily at $30 right now. So if we seriously break that back down, and you can see here, even though we broke back down, this was a fake out. And if anything, we're actually being supported pretty heavily at 30 bucks. So if we start to break out from here, we're going to see some resistance at first at 35, which the most trade volume in history has been there. But if we break out above 35, I do believe that we're off to new all-time highs. We're off to the races. Let me drop this. And that new all-time high is likely to be, yeah, 50 to 60 bucks, I would say. I mean, if I were to just do a fib real quick, let's do that. The 1618, good call. Yeah, 55 bucks would be like the 1618. So that would be a good target. Do you have any good advice from long-term investors? Yeah, consistently buy every single dip possible. Literally, don't even look at price. Because if you look at price, I mean, we're so programmed as human beings, and this is where you get wrecked, to look at prices, right? Like, oh, that sandwich is $14, but this one's 12. I mean, it's literally a $2 difference. Now, is a sandwich ever going to go up in value by 2? That's only if inflation seriously happens at a massive, massive level, which I believe we're in store for. I think the inflation is going to be higher than 5% over the next decade, every single year after year after year, if the government keeps printing this way, if not more, which means you lose 5% of your buying power every single year. What's that? That means if I go to spend $100, now I'm only getting $95 worth of product. The next year I go to spend $100, and now I get, you know, 95 times 5 divided by 95, or 95 divided by 5. So I really have like $89.5 worth of buying power the next year, so on and so forth, right? So in this situation, you actually have to outperform inflation with your dollar. If you're sitting on money in a savings account, it's the dumbest thing you can do. And what I mean by that is like anything more than your rainy day fund. Most people, they need the security of 6 months. I'm like, damn, that's a long time to be sitting on money, paying the bank, you know, and losing to inflation. I think tops 3 months, tops for most people. Now, if you have a family and children and you have a lot of, you know, financial responsibilities because you put yourself in that situation, then sure, 6 months. But for most people, I think 3 months is more than enough to have in a savings account accessible at all times. Every single other dollar you need to be putting into work in an asset class like cryptocurrency that is going to outperform inflation. That means if you earn 8% a year, you say, oh, I'm a smart person. Well, you really only earned 3% if you were to count in inflation. So
Wow.
that means buying power. So can I get 10% in a year, 15% in a year, 30% in a year? Is that possible? The answer is yes. Could you do it with stocks? Sure. You're not going to do it with bonds. You know, stocks maybe, but I mean, it's just an old market. And so I think there's less opportunity. There's a lot of opportunities in stocks, but I personally see less opportunity in stocks over the next decade than I do in the Web 3.0, you know, technical applications with cryptocurrencies, the decentralized finance system with cryptocurrencies, NFTs with cryptocurrencies. I see the technology here is vastly superior. And so for that reason, I think we're vastly going to outperform inflation, which means, yes, you should be investing in crypto all the time. Every single time you see a big red, green dildo candle, right? A red candle like these guys, and you see this indicator flash off, you need to be buying. Let's go to, again, the fixed VIX. Where is that thing? There she is. Now let's get away from that. On the daily, every single time you see one of these guys, bam, 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 again, here and here and here, just buy. That's all you need to do. That day, put as much money as you possibly can in to Bitcoin. If not Bitcoin, you can do it with Ethereum. If you're a safe investor, go for these guys. If you start to make some money, you want to take some more risks. And by risk, I mean there's a lot more opportunity, yes, but it is also a little bit riskier. I would recommend that you look into some of the other projects that we talk about in the Pumponomics channel. So my partner and I are updating that all the time with different crypto products that are newer, that have smaller market caps, that have far greater opportunity. But with that opportunity, there's a bit more risk. So you can take, maybe if you make your first $10,000 in Bitcoin, take $2,000 of that and start to allocate it 500 each into 4 small tokens that could pop off. Is it possible you lose all your money? Yes. However, it's still unlikely. We do a research enough to say this is something that we think is going to be around and it has real good utility and applications. And so if 2 of those popped off, if 1 of those popped off, not only do you break even, but you actually could 4, 5, 10x your money on that one single buy. So that's a huge investment opportunity. And that's what I recommend you start doing if you want to take on a little bit more risk. What kind of investments are we looking at right now? All of these guys here and then more. There are more, as you can see on the right-hand side here, there are more investments that we are getting into. But there's just a lot. I mean, that's a very broad question. We're looking for, I'll tell you this, we're looking at smaller market cap gems. What that means is, you're looking at this market cap right here is $1 trillion. We're looking at more like, here, let's go to the page 4, see what happens here.
Yeah.
You're still in the 143 million range. So you could even go as far as like page 6. And now you start to get into the 50s and the 10s, and anything under $50 million, if it's a legitimate company, has real good opportunities. Now, here's the problem. Most of these are probably crap. Just being real with you, they're mostly crap. So you do have to find them, through either the group that we have, or, if you start to see a name, mentioned enough on Twitter and it's sitting at $37 million, there's a possibility that's a good token. So let's just look at Salt real quick. You could do this all day long, by the way. You click on Salt, right? You can go ahead and go to, their platform here. And I like actually CoinGecko more, but we'll just stay here. I don't know if this is an Ethereum. Let's find out. Yeah, Etherscan. So it's an Ethereum product. You just go to Explorers, click in Etherscan, and you can see here, right now it's sitting at 49 cents. There's a total of 120 million. And so if I were to do the math, well, first and foremost, I have to know what's the circulating supply, which I don't see. But let's just say right now I did the math, 120 million times this, that's the total market cap, which shows right here, fully diluted. I'm not seeing circulating. There's 68,000 holders. So that tells me 68,000 people have believed in this enough to put their money in it. Matter of fact, though, since March, the holders have been dropping from 68.4 down to 68.3. So not by a ton, not enough to say over a period of 2 months, or excuse me, 2 weeks, that it's anything bad or serious. Let me go back to their product here. And you can just look at loans backed by crypto. How does this work? Go and watch a YouTube video. And then you make your own educated decision. Is that something that I'd like to get into? Is this a market that's worth, if it's only, what's the market cap again? $38 million, right? That's the actual market cap, which means circulating supply. There it is. That's your circulating right now, 80 million token. Is this possible to go to 100 million, which would basically be 3x this price? So 150.
Yeah.
This would be worth $1.50 if this thing hit $100 million, okay, in total market cap. So do I believe this company is worth that? Now, the thing about crypto, though, is that things pump unreasonably high to prices that they're really not worth at the current moment. I know one, for example, there's talks of partnerships left and right. There's no real working product just yet, I believe. Let me go to, let's just go there real quick. I'll just be real with you. This is straight up, and it happens all the time. By the way, Bitcoin is worth what it's sitting at right now, I believe. Some of these products aren't. There's this one that's been popping off left and right. Right now, it's ranked 59 out of all of the cryptocurrencies in the world. It's sitting at a cent. Why is it a cent? You could say, oh, that's a really good opportunity. I'll tell you right now, I could have a better opportunity in a $400 or $500 product buying one than buying 1 million of these tokens. Why? Because look at the market cap right now. It's sitting at $2 billion. Is this company worth $2 billion? Let's go there. It looks like, you know, you go to their site. Let's go to the site. Okay, we have some really cool partnerships. Again, partnership doesn't necessarily mean they're making money. It's simply you're buying access to maybe a future opportunity of them being a profitable company. So you still have to think about that. Is there some sort of a way for them to consistently win here? Because they could just lose a ton of money and you're stuck on a stock that you bought at the all-time high at 1 cent, and now it's going to drop to you half of a penny, less than half of a penny, right? A piece. The circulating supply is what, 750 billion? That's a lot. That's why the coin is so low of price. That doesn't mean this is a better opportunity than maybe salt. Why? Because is this thing going to pump up? So to go to 2 cents, go back to the economy. Oops, here. To go to 2 cents, this market cap needs to be twice the size. Is this company now worth $4 billion? At the current rate at which it's developed everything, I say 100% none of me believes that currently. It's possible it goes there, but that's for me to double my money. I would say in a company like Salt, and again, don't take my advice. I'm just giving you an example. I don't know. I'm not a financial advisor. I don't know enough about this project. I just found it because it was number 600. So that is the first thing I'm going to say. But it's, in my opinion, far more likely that a company like Salt is going to more likely 3x than Ecomi is going to 2x. So I'm going to make 3 times the money on a product like Salt over Ecomi personally. Now, is Salt still worth $100 million? Probably not right now. In this market, because we're in such a bullish environment, everything is pumping. But that doesn't mean it's always going to stay there. So that's something you also have to think about. Andrew, you're gonna have to. I don't believe I have an M1 and an M2 on my computer. But anywho, we'll talk about that some other time. So does anyone else have any questions? I hope that answered your question, by the way. Vasco. Are we good? Did everyone learn anything? I know Andrew could teach me a few things. But anywho, I'm gonna get this call. I'm gonna finish this call up, guys. We've been on an hour, 16 minutes. I'm glad you learned a lot, Vasco. And I appreciate you guys staying on the call. If you guys have any questions, just reach out to my my Telegram, and I can go ahead and answer those questions for you that you forgot to ask on this call. So, yeah, thanks so much for being on the call, and look forward to the next one. I'm gonna stop sharing now, and I'm gonna end.